Every year, millions of people lose over $8.8 billion to financial scams. And the hardest part isn't just losing the money. It's realizing you saw every red flag and ignored them all. This isn't about becoming paranoid or distrusting everyone with a business card. This is about understanding the exact psychological tricks scammers use to bypass your rational brain, and why the smartest people often fall the hardest. Because here's what nobody tells beginners. Scams don't look like scams anymore. They look like opportunities. They sound like solutions. They feel like secrets that only the smart money knows about. And by the time you realize what happened, the person who promised you financial freedom has vanished, along with your savings. Let's break down the precise patterns that separate legitimate investments from elaborate traps, and give you a framework that works whether you're evaluating a crypto project, a real estate scheme, or your cousin's can't-miss business venture. The first thing you need to understand is that scams exploit one specific vulnerability: your desire to skip the hard part. Real wealth building is boring. It's consistent contributions to index funds returning 7 to 10% annually. It's budgeting and patience and watching small numbers grow slowly into large ones over decades. A $500 monthly investment at 8% returns becomes roughly $360,000 in 30 years. That's real. That's achievable. That's also not exciting enough to make you act immediately. Scammers know this, so they offer you the shortcut. They promise 15, 20, even 50% monthly returns. They create urgency. This opportunity closes Friday. They manufacture exclusivity. We're only taking 10 more investors. And they weaponize your fear of missing out by showing you testimonials from people who already made it. Here's the mathematical reality that exposes every scam. Guaranteed high returns don't exist because risk and reward are inseparable. When someone promises you 12% monthly returns, that's over 280% annually. Ask yourself why they need your money. If they truly had a system generating those returns, they'd borrow from banks at 3 to 5% interest, keep the massive profit margin, and scale infinitely. The fact that they're pitching you means either the returns are fabricated or you're not the investor. You're the product being sold to the next person in line. This is the pyramid structure hiding behind impressive language. Let's compare two scenarios to make this concrete. Scenario 1. Legitimate index fund investing. You invest $10,000 into a diversified ETF, like VOO or VTI. Historical average returns hover around 10% annually. After 1 year, you have approximately $11,000. After 5 years, roughly $16,100. After 10 years, about $25,900. Boring? Absolutely. Guaranteed? No investment is guaranteed, but this is backed by the collective growth of America's largest companies over decades of data. Scenario 2. The guaranteed opportunity. Someone promises 20% monthly returns. You invest the same $10,000. After 1 month, they show you $12,000 in your account. After 3 months, $17,280. It feels incredible. You're beating the market by massive margins. You invest more. You tell friends. Then, month 7 arrives, and suddenly the website is gone, the person isn't answering, and you realize those numbers were never real. They were just bait to keep you feeding the system until it collapsed. The difference isn't subtle if you know what to look for. Here are the 5 universal red flags that appear in virtually every financial scam, regardless of how sophisticated the presentation appears. Red flag 1. Guaranteed returns or promises of no risk. Any investment claiming zero risk with high rewards is lying. Even government bonds, the safest investment available, carry some level of risk and offer minimal returns precisely because they're safe. Real investment professionals discuss risk management, diversification, and realistic historical performance ranges. Scammers discuss certainty. Red flag 2. Pressure to act immediately. Legitimate investments don't evaporate if you take time to research them. Markets are open every business day. Real estate doesn't vanish overnight. Quality opportunities allow for due diligence. Scammers create artificial urgency because they need you to bypass your logical analysis and act emotionally. The moment someone says, "This deal expires tonight," that's when you walk away and research for a week. Red flag 3. Complexity that doesn't simplify under questioning. Real investment strategies might be sophisticated, but experts can explain them clearly. If someone describes their system using buzzwords, jargon, and circular logic that never quite answers, how does this actually make money? They're either running a scam or don't understand their own product. Either way, your money shouldn't go there. Watch what happens when you ask specific questions. Red flag 4. Returns that come from recruiting others rather than actual business operations. This is the pyramid scheme mechanism wearing different masks. Whether it's crypto, wellness products, or business coaching, if the primary way to profit is by bringing in new participants rather than selling legitimate products or services to end consumers, you're looking at a structure designed to collapse. The mathematics guarantee that most participants lose money because the system requires infinite growth in a finite world. Red flag 5. Unverifiable credentials or reluctance to provide documentation. Real financial professionals have registrations, licenses, and track records you can verify independently. They welcome scrutiny because transparency protects both parties. Scammers provide vague claims about their success, show screenshots that could be fabricated in minutes, and dodge specific questions about regulation, auditing, or third-party verification. Now let's address the modern landscape where these patterns appear most frequently. Cryptocurrency has become the perfect vehicle for scams, not because crypto itself is fraudulent, but because the technology is complex enough to confuse people and unregulated enough to protect scammers. Legitimate crypto investments exist: Bitcoin, Ethereum, and established projects with clear use cases and transparent development. But the space is also flooded with pump and dump schemes, fake tokens, and rug pulls where developers create hype, collect investments, then vanish with the funds. The pattern is always similar. A new token promises revolutionary technology, explosive growth, and early investor advantages. They show you charts trending upward. They reference complicated blockchain concepts. They create countdown timers for launch dates. And they need you to buy in now, before the price moons. Here's your protection. If you can't explain in simple terms what problem this cryptocurrency solves and why it needs to exist, don't invest. If the primary marketing focuses on price predictions rather than actual utility, walk away. If the development team is anonymous and the white paper reads like science fiction rather than technical documentation, your money is safer anywhere else. The same principle applies to every investment category. High-yield savings accounts promising rates 10 times above market average. Real estate flipping courses guaranteeing six-figure profits in 6 months. Forex trading systems with secret algorithms that beat professional traders. Business opportunities requiring upfront payments for training materials you could find free online. They all follow the same blueprint. Exploit your desire for fast results, create artificial urgency, and disappear before you realize the foundation was never real. So here's your practical framework for evaluating any financial opportunity that comes your way, regardless of how it's packaged or who's presenting it. Step 1. Remove emotion and urgency from the equation. When someone presents an opportunity, your first response should always be, "I'll need 3 days to research this." If they respect that boundary, you're dealing with a professional. If they pressure you, you're dealing with a predator. Take screenshots of everything. Save all communications. Real opportunities don't evaporate when you apply rational analysis. Step 2. Verify independently. Don't trust the materials they provide. Find outside sources. If it's an investment advisor, check their registration with FINRA or the SEC. If it's a business opportunity, search for reviews from people who aren't trying to recruit you. If it's a crypto project, examine the blockchain activity, developer history, and community discussions on neutral platforms. Truth reveals itself when you look beyond the sales pitch. Step 3. Run the numbers yourself. Take their promised returns and calculate what that means over 1 year, 5 years, 10 years. If someone promises 20% monthly returns, that's 791% annually. That's not just beating the market, that's defying fundamental economic principles. When the math requires miracles, you're looking at fiction. Step 4. Identify the actual revenue source. Every legitimate business makes money by providing value to end consumers. Ask explicitly, where does the profit come from? If the answer involves recruiting other investors, membership fees that primarily fund existing members, or vague references to the market without specifics, you've found your answer. Step 5. Trust your discomfort. Your intuition developed over thousands of years to detect danger. If something feels wrong, if the person avoids direct questions, if the explanation keeps shifting, if you feel pushed rather than informed, that feeling is data. Successful people listen to that signal. Let's bring this back to the fundamental truth about building real wealth. The reason scams proliferate is because legitimate wealth building requires patience most people haven't developed yet. That $500 monthly investment we discussed earlier, it's not glamorous. It won't impress anyone at parties. It won't generate immediate excitement. But 30 years later, when most people who chased shortcuts have nothing, you'll have $360,000 working for you, generating passive income, creating actual financial security. Real investing is about understanding that every dollar you invest today is an employee working for you forever. Index funds average 10% annually over decades. That's your money doubling roughly every 7 years through compound growth. Boring? Perhaps, but boring and rich beats exciting and broke every single time. The psychological shift that protects you from scams isn't cynicism. It's understanding that building wealth is supposed to feel slow, because you're constructing something that lasts. Scammers sell you the microwave when what you need is the slow cooker. They promise instant transformation when real change requires consistent, small actions. They exploit the gap between where you are and where you want to be by offering a bridge that doesn't exist. Your defense is simple. When someone offers you financial opportunity, treat it like you would any other major decision. Research thoroughly. Verify independently. Remove emotional pressure. Calculate realistic outcomes. And remember that the best investment opportunities don't require you to act today. They'll still be there tomorrow when you've done your homework. Because here's what changes everything. Once you understand the patterns, you become almost immune to scams. You'll recognize the urgency tactic. You'll spot the guaranteed returns lie. You'll notice when someone deflects specific questions. You'll see the pyramid structure hiding behind innovative language. And most importantly, you'll trust that slow, consistent wealth building isn't settling for less. It's choosing the only path that actually works. Financial security doesn't come from finding the secret opportunity everyone else missed. It comes from understanding that there are no secrets, just principles applied consistently over time. Patience when others are chasing shortcuts, and the confidence to walk away from anything that promises miracles. The scam artists will always exist, creating new variations on old tricks. But they only succeed when you believe wealth works differently for other people than it does for you. It doesn't. The same boring principles that built wealth for millions of people before you will build wealth for you too, as long as you protect your capital from those promising faster roads that lead nowhere.
The single best financial decision you can make right now? Invest in your financial education. Hit subscribe to get our next breakdown and turn on notifications so you don't miss out, because the system only works if you apply it consistently. I'll see you in the next one.